Let's welcome in a very special guest now. Mahesh Nandurkar of CLSA is now joining us. Mahesh, thank you so much for taking out time for us. Always good to get some perspective from you. CLSA recently released one big report regarding the housing sector and what is expected over there. Can you just tell us what's the theme on housing? Do you think housing finance, housing related supply companies, which have been in a structural bull run, will continue to deliver good growth?
Yeah, so it's one of the biggest themes that will unfold over the next several years. What we have highlighted also in the report is that over the last 5 years, the property markets have remained flat. I mean, basically zero volume growth and zero value growth as well. But that is about to change. That's about to change because of two reasons. One is the overall affordability has improved significantly, and our analysis shows that the affordability indicators are going back to the levels of 2003-2004 in many price segments, not in the top price segment, but at least the pricing segments of, let's say, 50-60 lakhs and below. So that's clearly going to be one key driver, and the affordability has improved because, as I said, the last 5 years the prices have remained flat, but the per capita income has grown by 8 to 10%. Also, we've seen the mortgage rates coming down by almost 250 basis points. So that's one. And the second reason is the government push with the affordable housing scheme, with the home loan subsidy and the tax incentives for property developers and so on. So we believe that the future of the property market is going to be quite optimistic, and things are about to change. So that's the basic theme that we have been talking about, and I think it's a pretty large theme because the property sector as a whole, it's a pretty large part of the economy itself, about 5% of GDP, and has a lot of sort of implications for the job creation as well. So we believe that with this big change in trend expected over the next few years, it's good times for the housing finance companies, the building material companies, including, let's say, cement, or the construction related materials such as pipes and the other materials. And also it will be a positive development for the property developers as well. So a whole host of sectors that will benefit out of this.
When we actually earlier interviewed you, you said that government has no choice but to boost housing. Do you think that boost has already come, or do you think more steps would come to boost the housing demand?
No, I think in terms of the announcements, a lot of things have been announced. Now, what we'll be looking forward to is the implementation. I mean, the government has already allocated a pretty large sum of 30,000 crore for this housing scheme in the FY18 budget. So the government intention is very clear, and now all the sort of eyes will be on the implementation of it. We've already seen that the rural part of the scheme, called as PMAY Rural, has ramped up quite well, and last year we saw 2.5 million houses getting constructed as compared to the annual run rate of around 1 million a few years ago. We would now be looking forward to a similar ramp up of the scheme on the urban side as well, because that has a much higher multiplier impact and much higher value impact. So yes, I mean, what we'll be looking forward to now is the implementation side of it.
Right. So last time around, when in 2004 to 2008, you saw that big real estate boom, which created a lot of jobs, a lot of money supply, was led by price increases of the real estate prices, and then also with a lot of transactions. This time around, you expect prices to go up, that sort of a boom, or you expect volumes to pick up, which was not the case earlier?
Yes, a very valid point, Pankaj. So we clearly believe that this time the property sort of sector boom will be driven more by volumes and less by pricing. Also, the boom would be visible, in my view, more on the affordable segment, or let's say the pricing points of less than 50-60 lakhs, and not the 1 crore kind of houses. Also the big difference between the last time and this time is that the last time the improvement in the activities around the property sector was completely market driven forces and completely privately driven. This time government is intervening and actually giving a boost boost to the affordable segment, much more. And the focus of the government is also on volumes and not so much on the pricing front. So I think that's clearly one big difference. So we should not be expecting, any sharp price appreciation going forward, but we believe that the housing subsidies and the others will give a better boost to the volumes, and as I said, mostly in the 50-60 lakh or below kind of pricing points.
Right, Mr. Nandurkar, you're very optimistic about increase in volumes, but where is this optimism coming from? Look at the inventories in the NCR region, look at inventories in some of the other regions. When inventories are so high, where are the volumes coming from? Yes, the government is giving a push towards affordable housing, but the government is not going to construct these homes. They will be done in association with private developers. Private developers don't have the money to develop it. Their inventory is stuck. They're waiting for people to pay them. RERA is coming. And RERA is going to kick in very soon. So unless they get the act together very soon, they'll be in deep trouble. So where is the volume growth coming from?
Well, a very good question. So, the micro markets that you mentioned, such as, Noida or Greater Noida or, some other parts, of India, there are a few micro markets where the inventories are clearly on the higher side. And, you would also appreciate that, most of the data that we get about the inventories, etc., is also about the houses which are, above that, 50 or 60 lakh category, which I, just mentioned. We are not that bullish, on the highly priced, housing segment, just to reiterate myself. So I think that's one thing to keep in mind. The second thing is also, when we talk about inventories, there's a big difference when we talk about inventories in India and inventories, elsewhere in the world. So the most commonly notion about inventories elsewhere in the world is that, inventory is something which is ready to occupy, ready to move in, but not occupied as yet. Whereas in India, the definition of inventory is that ready to sell, but not sold as yet. So a lot of this inventory is still under construction and also in the very initial stages. So that's one differentiation that we need to keep in mind. The second thing is that you talked about RERA and you talked about other things, but in that what I've sort of always felt is that when the demand comes, the supply follows. So we will not be in a situation where there is more demand, but the supply is not coming through. I don't really envisage that kind of situation. And secondly, there are enough incentives now being provided to the developers as well, those who are those who would be building these affordable housing. So if you are a developer building a house less than 60 square meters of carpet area, which basically means almost like 1,000 square feet kind of a sellable area apartment, you get income tax benefit under 80IB. So those sort of incentives exist on the supply side as well.
But India's real estate market has never been about supply and demand dynamics. Look at the rental yield. It's less than 2%. So, when you have to play this housing boom, you've got to be selective. Everything has moved up now. How would you play it? Because I think the developer side of the story is not looking very healthy. And when you look at housing finance, there is an assumption that affordable housing loans will see an increase. Yes, it could work out. It has always been the American dream to own your house. But the dynamics in India are different. And when rental yields are so low, I mean, it would make sense to anybody that renting is better than buying. So could that quell that sentiment about housing finance as well? How would you play this story going ahead?
So your point on rental yield is very valid, but you must appreciate that that has been the case in India, I guess for the last 50 or even 100 years. So even we saw the boom in 2004 or 2003, the rental yield was, just about 2 to 3%. So, India is that way, quite a unique market. To come back to the original point that you made about how to play this, I think the best way to play this, story is clearly through the housing finance finance companies. Housing finance companies, whether you buy a 10 lakh, 20 lakh, 50 lakh or a 1 crore kind of a house, housing finance, is something that will be required, any which way. We feel that the, housing loan market, which grew by, close to 14% or so, over the last 4 to 5 years, will easily, grow by 18 to 20% going forward, with the, the kind of changes that we're talking about in the housing market. So that remains our best way to sort of play the story, followed by the building material segment. As I said, some select companies on the cement side and the construction pipes and so on. I agree that the valuations are not really mouth-watering at this point in time, and a lot of companies are trading well above their averages. Companies like 25 times to 35 times on a PE multiple basis. But what I can tell you is that this is at least a segment where there is visibility of growth. Many of these companies will be growing earnings by more than 25% over the next 5 to 7 years. So I think it still makes sense to own this theme.
That's very optimistic. Growth going ahead closer to 18 to 20%. Some can even do 25%, you think. When I don't even know I'll have a job going ahead, do you think I'm going to take a home loan? Look at the job losses across the country. I mean, all that has been spoken about. Do you think there's a lot of over-optimism being built in?
See, the thing is, what we always tend to focus on, is just what's happening around you. So there might be some industries, might be facing pressure. But, if you look at the country as a whole, I think the real growth story of India is really, in towns and, smaller places. We are talking about India's GDP growth in nominal terms, to be around, close to 11 to 12%. And if you knock off the population growth of say around 2% or so, in fact it's less than that, the per capita income growth in India as a whole is 9 to 10%. So don't forget that. So it's easy to get carried away by a newspaper headline, but don't forget the fact that per capita income growth in India is about 9 to 10%. So the newspaper headlines do not necessarily give you the true picture of the entire economy.
All right, Mahesh, thank you so much for being with us on NDTV Profits. So CLSA betting on the growth in Bharat, perhaps over the growth in India. Thank you so much for being with us on NDTV Profit, giving us your views on what is likely to grow strongly from here on and what you're betting on.